Hello, it's Richard Wilson coming to you from Geneva, Switzerland. I operate the Family Offices Group, the world's largest professional association, family office professionals, and I also operate PrivateEquity.com. And I was just recently at an event down the street here speaking on family offices, and one thing I talked about is what family offices are looking for in fund managers. And I just wanted to give a real quick 2-minute summary of what family offices are looking for as private equity investors, so that those of you in the private equity industry can get a hint for what's important if you're trying to raise capital from the space. So if you don't remember anything else, there's a few things that you should definitely write down. One is capital preservation is the #1 and #2 most important thing that family offices care about. They don't want to lose their money, or as Mr. Wonderful would say from Shark Tank, Kevin O'Leary, don't kill my money. They know how to make money. They're typically entrepreneurs or have done well on the private sector side, but they don't want people losing their money. They don't want you to lose the principal. They care more about that than taxes, than high growth, than some new exciting idea, than anything else. These people are time sensitive. They are tax sensitive. They would like income and growth. The capital preservation part, I can't stress enough. Next, they want managers who are consistent, reliable, professional, and they want the most credible, well-known team possible. It's very smart for a fund manager to get some celebrity-type people on the team, whether they're ex-CEO of a large investment bank, or they came out of a large, well-known private equity shop, or whether they are just a well-known business figure who's now a savvy investor and he's gotten on board with your private equity fund, can make a massive difference in getting meetings and having people take you seriously. Because they know that, for example, if you had Richard Branson on your board of advisors, that you must be somebody who is of value, or you wouldn't have even gotten a meeting with Richard Branson, much less gotten permission to have him on your advisory board and work with him. So definitely, if you can pull that off, it's worth whatever time it takes to do that. Finally, the last thing to remember is that, or maybe not remember, the last thing to share is that when I speak to family offices, what they complain about almost more than anything else is that nobody listens to them. Nobody pays attention to what they're saying. They ask for materials, fund managers just don't get back to them. And there's a few reasons for this. Family offices are actually seen as very small investors by most private equity fund managers. They want to raise capital typically from pension funds, endowment funds, foundations, because you can raise 20, 30, 50, $100 million at a time. Most family offices are going to allocate $3 million, $5 million, $10 million, maybe $1 million or less if you'll allow them. And so a lot of private equity fund managers don't treat family offices very well. Family offices know that and are very annoyed by it. They just don't get serviced well after the money's invested. They don't get consistent reporting. They don't get somebody assigned to their account who is senior enough to answer questions on the phone, and they just don't get much follow-up. So if you give extra service and provide extra insight and extra help and resources to these family offices, they might refer you to other families and stay with you longer and be more loyal money to your private equity fund. So definitely remember that. So the most important things to remember is to think about capital preservation. And when you're explaining your strategy to a family office, make sure that you don't forget to talk about how the portfolio is defended by your approach to deal sourcing and not getting to auction, overpaying for private company situations or things like that. And then also just make sure that you take close notes on everything any family office tells you, and then always follow up, always follow through, and actually give direct answers and complete, concise, quick answers when a family office needs something that you're working with. So it seems very simple, but over and over again, the most experienced family offices complain about that, about private equity fund managers. So I hope that these few pieces of insight are helpful to you. I basically narrowed down an hour-long speech into just a couple minutes as the most important, kind of quick sound bites of the most important things I shared. So I hope that helps. This is Richard Wilson coming to you from Geneva, Switzerland, and I'll talk to you again soon.